It is a tale of two retailers on this Wednesday. Target tanking off 10% at its lows today, right now down about 8% after a key measure of sales fell for the fourth consecutive quarter. And the retailer remains cautious about discretionary spending for the coming months. But wait a minute.
There's also TJX. That stock rallying up more than 7% at its high, rising to a record high right now by about 4.2%. This after the Maxinistas were out shopping. The off-price retailer boosted its earnings per share forecast for the full year with first quarter results, Carol, better than many expected. That, according to Citi.
All right, so let's get to our retail roundtable. With us is Bloomberg Intelligence senior retail analyst Mary Ross Gilbert in our LA bureau, along with Bloomberg News retail reporter Jaewon Kang in our Chicago bureau. Hey, Mary, I want to start with you. Let's start with TJX stock rallying in a big way. Walk us through the quarter, the outlook in the business.
Yeah, so when you look at the quarter, as you pointed out, they beat on the earnings line. But on the sales line, when you look at comp sales came in at 3%. That was below consensus estimate of 3.4%, but it was the high end of the company's plan. So that was fine, except usually they like to beat their plan. The reason for the miss was really weather, and it was on the apparel side of the business where they were a little bit lighter, and it had to do with weather. Other than that, all the other categories across the board were performing well. Actually, home, when you think of home goods, don't think of furniture. Think of more consumable, type homes, home decor. It could be something for the table. And in that side of the business, they actually outperformed. On the margin side, that's where we saw the gains, better than expected, and that really came from higher mark-ons. So this team of buyers are able to really buy. First of all, they're the largest in the off-price space, so they carry a lot of weight, and they have several years of expertise going through a very carefully crafted buying program, so they really know how to buy well. And they have the ability to even implement selective price increases, something you're not hearing from the other retailers. So the combination of that boosted their merchandise margin, and they were able to be more efficient on the freight side by allocating more to rail away from trucking.
Oh, that's
and that
interesting.
was the boost you saw in margin.
So
Yeah.
Mary, does TJX do well no matter the economic backdrop? I know Carol is a big
I know
fan.
me some home goods.
Yeah, she's like talking in their meeting earlier about buying home goods. I'm wondering how that's powering the company's earnings for the most
I hope
recent
John
quarter.
isn't listening.
But does it do well regardless of how the American consumer is feeling because it has this exposure to different retail segments?
Yeah, well, you have to think about, it's not just, having different segments, including home, but home does help. It helps with the seasonality aspect when you get hit by weather. But the other thing you have to know with TJX is that they serve customers that are from the lower income all the way up to, let's say, the upper middle income and even luxury to a certain extent, because they'll have brands as high as, a Chloe or Versace, but then they'll have Calvin Klein, Trina Turk, Under Armour in there. So they have such a wide range of eclectic product in this treasure hunt with multiple shipments a week, so that it really inspires you to go multiple times because you're always going to find something that's really special. And I think that's their success, their recipe for success.
A lot of designer bags in the shopping carts. I see them all over the place. Jaewon, come on in on Target, because it's a different story for Target. As Tim mentioned earlier and we talked about earlier, Target is down about 8% as we speak, down 10% at its lows today, but really taking a major hit. Walk us similarly through Target's quarter and outlook and why it's maybe having a tougher time here, or why investors are disappointed.
Yeah, so Target's comp sales fell for the fourth consecutive quarter, with people staying on the sidelines for discretionary purchases. The sales decline that was in line with Wall Street estimates. Adjusted earnings were a slight miss, but it's worth pointing out that this is a metric that's had consistent beats in recent quarters. And overall, the executives said today they won't be satisfied until they return to growth this year, and that they're on track to do that. But many investors were expecting a bit more, and that's translated to the stock performance today.
What's wrong with Target? What's going on at Target that they're struggling? And I'm just curious, is there something about that consumers are pulling back? It's maybe, I don't know if it's a similar customer as TJ Maxx, but what's going on at Target?
It's, been on a really interesting path and I mean, in a pretty crucial moment right now. So it was a bit of a darling during the pandemic when people were willing to spend a lot on their homes. But of course, that's taken a turn as they, started pulling back on those purchases and other discretionary items with prices, going up. Interest rates also remain high. And on top of that, last year, their Pride Month assortment drew pushback and that, hit sales as well. So they are trying to get back to growth and have said they expect it to happen during the second quarter.
I guess I'm wondering if, this goes back to the problems they were having in 2022, Jaewon, because they were in the midst of a huge decline in their share price going back to that year. Pretty much historic when we think about it in the context of the retailer. Are they still recovering from that, or is this a new set of challenges?
It's continuation of that. They have also talked about, consumers still being pretty concerned about high prices, high interest rates, upcoming elections, and that's partly why they expect discretionary spending to remain under pressure for their near term. They're seeing lower demand for discretionary products like home goods, what they call hard lines, so things like appliances. And during the latest quarter, they also saw declines in frequency categories, which refer to essentials like groceries.
I want to go back to TJ Maxx for a moment. Mary, I came across a store, HomeSense. Is that another part of their brand?
It is, yes. It's part of the home goods segment, but
Okay.
they have two different brands, Home Goods and HomeSense. So when you think of HomeSense, think of bigger items. So that's going to be like large rugs and maybe an end table and things like that. Things that are a little more bulkier.
Yeah.
That they don't. What they said today is they don't really want to enlarge the home goods stores to be able to capture that market opportunity. So that's why they sort of created HomeSense, and of course it's performing very well as a result.
And is that new, kind of newish? It's the first time I saw
It's
it.
newish, but
Okay.
not new.
Okay.
But there is tremendous white space for growth there,
Yeah.
as you can imagine.
Hey, Mary, these two reports taken together, plus what we heard from some of the other retailers, including Walmart last week, with the idea that the Walmart shopper is actually increasingly on the higher end of the economic spectrum. How would you characterize the American consumer right now? Like, what's the big takeaway from the quarter when it comes to retail earnings?
Yeah, so we're still early in our retail earnings reporting, but the big takeaway, number one big takeaway is the consumer is resilient. And the reason for that is employment is strong and actually wages generally higher than inflation. So that's the good news. But I think when you're talking about Walmart and Target, you're seeing a different story, coming into play. And part of that is really that the lower income consumer is still stretched by inflation. So while, it's not rising as much, it's still up. It's more modest now, especially on the food side, maybe 2 to 3%. But it's still affecting the lower end consumer.
Jaewon, come on in too on that same thing. Of the retail sectors and names that you keep an eye on, what are you generally kind of taking away in terms of trends or themes when it comes to the retail environment, and then, what it means for consumers?
Yeah, the earnings season, we're halfway through for the big box guys, and it's been pretty mixed. Walmart talked about the success they're having with, higher income consumers in particular. Their discounts are certainly resonating. Target, as we talked about, struggling with, different sides of the business. So, it's been mixed, and I think the narrative overall for the sector is that, people are resilient, they are paying for essentials and other products that they need, but, still facing a lot of uncertainty when it comes to the broader environment.
Jaewon, very briefly, you also cover food retailers, and I'm wondering the next name on your radar when it comes to reporting, or just when it comes to the important thing for our investing audience to keep an eye on.
Yeah, so Kroger is the next food retail name that's coming up in a couple of weeks. We'll hear from Costco next week. And, those companies, I think, will also give us insight into how people are interacting with groceries, where they're pulling back, where they're spending. So, we'll be busy next couple of weeks.
Yeah, good stuff. Mary, how about for you? On your radar in terms of any other retail to come?
Oh yeah, there's a lot.
There's a lot, I know.
So so tomorrow morning we have Ross Stores, And also tomorrow we have Ralph Lauren. I'm sorry, tomorrow morning's Ralph Lauren. Tomorrow afternoon is Ross Stores. So Ross Stores, if you kind of think of off-price, TJ Maxx is at the high, the high end where they'll capture more of the upper middle income consumer. So Ross is kind of in the middle, and then Burlington Stores, which will report the following week, is at the lower end of the spectrum. So where TJ Maxx can actually take price, which means they're increasing prices on select items and not getting any pushback because their price points versus comparable product out there is still low. Where Ross is wanting to bring in more and more brands to attract that trade-down consumer from department stores and sort of get that higher income, higher middle income. They are actually reducing prices.
All right, guys, thank you so much. Mary Ross Gilbert of our Bloomberg Intelligence team and Jaewon Kang, Bloomberg News retail reporter with our retail roundup.